Hello, good day, everyone. My name is Success Eugene. I'm going to be moderating today's webinar. I am WMI's Leadership Skill Development Coordinator, and I'll be moderating this webinar for week 7 for the business focus under the monitoring and evaluation. So we have our presenter here with us, as we can see, but we'll just give an extra minute for more people to join, more participants to join, and then we'll officially kick off. So you're welcome. Welcome, Leah. Welcome, Sharon. Please, you can use the chat to introduce yourself and where you are joining us from. Thank you. Thank you for joining. This is Success Eugene, and I'll be moderating today's webinar. We have our presenter here with us, Philip Oduma, and we'll be starting in a very short while. Today is week 7, the first webinar and the only webinar for the business focus this week, which is on M&E. So you're welcome to today's webinar. I'll just be doing a brief introduction of our presenter. So Philip Oduma is an accomplished program manager with a proven track record in the nonprofit sector and effective organizational management. His expertise lies in a diverse range of areas, including research, programming for orphans and vulnerable children, OVC, entrepreneurship, economic empowerment, training, program management, information and communication technology, and team leadership. He has a robust skill set through his degree in Bachelor of Business Administration with a focus on procurement and supply chain management from Maseno University. Additionally, he's also a member of the Rotary Club, and this emphasizes his commitment to community and social services. Currently, he's enhancing his knowledge through a pursuit of a Master of Arts degree in project planning and management at the University of Nairobi. So we are so honored to have Philip here. And if you were at the DBC, you'd know that Philip was also one of our presenters in the workshops at the Dream Big Conference in August this year. So Philip, you're welcome. Everyone, if you have questions and if you have concerns, regarding your pitch presentation or your business plan development, please include it in the chat, and I'm sure Philip will be glad to attend to all the questions after his presentation. So over to you, Philip. Thank you so much.
Thank you, Success, and thanks for the introduction. Team, thanks for attending. First of all, accepting to attend this session. I know probably you have maybe other things that you could have been doing, but then you chose to be here. So it's my pleasure to present to you today. And I'm just going to be the one chairing the meeting, so I'm not going to be I don't own all the knowledge. I mean the knowledge in M&D and project management. So I believe I'm also going to learn a lot from you. So I just like to take us through to the next slide, which is uh, why is it not moving? Okay, it is there. Okay, so uh, we we the first objective for this meeting today is, first of all, we're going to be able to go through the principles, objectives, and processes of project monitoring and evaluation. And then number two, just provide sufficient understanding of the role of monitoring, evaluation, and rural development, and also to be able to judge the effectiveness of existing project M&D systems in business enterprises. So what you're going to do today is most of the time when we think about monitoring evaluation, we always just think about of it in the aspect of the development world, but then we never think of monitoring and evaluation in the aspect of business. So today we are going to discuss that in the aspect of enterprises and the business that we run. So I just had before we can start, I had something I wanted to show us. I don't know if you're able to see. Could you please confirm if you're able to see? So I'm going to start it from the start.
Yes,
Unfortunately, there's
I
no,
can see your plan.
yes. So I'm just going to start it from the start, and then maybe people can just tell us what they've been able to see. Okay, so that is it. I know there's no audio, but then people have been able to see. So maybe you can just unmute and just tell us what you are able to see. Uh, uh, just unmute. So just tell us what you're able to see, and maybe from your own perspective, what do you take of the what we've been able to watch? So anybody's random, and just unmute, please, and just give it an attempt.
Yes, you can raise your hand and we'll give you the permission to speak.
Yeah, yes, please. Whoever speaking, just continue speaking. I mean, maybe you can speak loudly so that we can only hear you. Yes. Can people hear me?
Yes.
Okay. So success, we can start with you. So what have you been able? I mean, what's your take? Okay. What first of all, what have you been able to see, and what is your take on whatever you've been able to see?
Okay, I would like Rosemary to go first. She's,
Mm,
yeah, she's ready to go now. Yeah.
okay.
Okay. I'm able to see cars loading, people like walking around the car. I'm able to see a boat and like a
Mm,
water body. Yes.
mm, okay.
Yeah,
Uh,
yes.
Thank you, Akello. That is appreciated. Anyone else?
From Elizabeth is saying that she
Okay.
sees several cars and people at the cliff and a car that has fallen into the water. Several trucks
Mm,
attempting to extract the car also fell into the water.
mm,
So let me allow Sharon hand is raised
okay.
too.
So I've seen like cars. I think it's more like the cars were falling into the, I don't know if it's a dam or something. And then uh we can see this other car trying to remove the cars from there. Wait, am I supposed to illustrate what I'm seeing right now or what I was able to see
No,
earlier
no.
on?
Whatever you're able to see, the entire thing.
Yes, so I can see um
Mm,
the other one lifting, like trying to remove, like this one, trying to remove the cars that had fallen into the water. And yeah, there are people around trying to see what is going on and how they are removing such cars. And I can see this other one falling in again before the rescuer comes in.
Mm. Okay. Thank you.
Mm.
Do you have any thank you for that. If you're around, I could have bought you some sweets, so you're able to really be observant. So yeah, indeed. So as you can see, we had this from this initial picture, we had this car that had fallen into the ocean, and then this towing truck was brought. It was supposed to be towing this car, and then they were really doing it well. And then it got to the point where it was almost lifting it away from the ocean, and then all of a sudden, the towing truck also fell into the ocean. And a second towing truck was brought now to tow the car and also to tow this other towing truck. And if you're able to be keen, you also saw that also the second towing truck was also did not succeed to pull the other towing truck, and it also fell inside the ocean until the third one was brought, and the third one is what was able to do the work effectively. This third one. So I don't know if you are able to maybe get some learning from this in terms of whatever we do, in terms of our businesses. Is there something that we can be able to learn from the three incidences where a towing truck was brought and it was not able to do the work. A second one was brought, it was not able to do the work, and now a third one had to be brought for the work to be done. So, are we able to maybe uh, 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 draw this learning to whatever we do at our enterprises on a daily basis? So you can just raise your hand and just give us like an idea. Uh, yeah, Sharon Mwaweza. I don't know if I'm spelling it right. Are you from Tanzania?
No, I'm from Zambia, but my parents are from Tanzania.
Oh, okay.
Yes, thank you. So, what I'm able to observe and learn is that many of the times we might try and fail. We can try again and fail, and try again and fail, and then try again and succeed in whatever we are doing. So I think that's the lesson. But even if you fail, don't stop. Keep trying.
Keep on trying, right? Okay.
Yes,
Uh,
thank
uh,
you.
thank you for that, Sharon. Any other person? Anyone else?
Yeah, we have Elizabeth here saying in the comment in the chat, she said, failures can occur in business, but we are supposed to learn from them and improve on the
Mm,
mistakes previously made.
okay. Thank you. And I think I'm going to take the two. So when you look at it from the optimist side, that is Sharon. So we learn from the failures, and we keep on trying. So the reason why we have monitoring and evaluation is so that we can be able to spot, because as we're going to see in definitions, so monitoring is something that we keep on monitoring. We monitor the business processes, we monitor the business outputs, that in terms of sales, so that we can be able to learn something and always be able to do better. So and also, if you don't learn, because you see, if there was a monitoring and evaluation person, after the first failure, somebody would have been fired, because you see, after the first failure, when someone was bringing in the towing truck, then it means that we should have been able to really collect data and be able to ask ourselves, why did the first towing truck sink? And then now, when we bring in the second one, we should have been based on data. So it means that somebody did not do their work right. And that is what even happens to our businesses. You realize that people fail, but then they keep on failing with the optimism that we always have, that you just keep on failing. One day you'll succeed. But then, money is spent. Like for the second towing truck, someone spent their money. So that money is lost, and somebody somewhere should have been accountable, because it is the work of everyone to monitor and use data to make decisions. So if we use data for decision making, then it means that thing should have been done by the second attempt. So thanks for that. So I don't know if somebody can tell us what is M&D. Probably monitoring and evaluation, just based on our understanding. So just two people, like what is your understanding of monitoring and evaluation? So it's an open forum so people can be able to share. So what's our take? And especially monitoring evaluation at the aspect of business enterprises. So anybody, just the first success we can have through attempts. Hello.
Yeah, I am looking out to see if anyone is willing to attempt.
Yes, Elizabeth
Uh,
Kinyale. Don't mind my pronunciation of the names. I'm a Luo from Kenya, so we have a heavy accent. So I hope you won't mind. So Elizabeth,
Okay, so monitoring, I think it's the process of ongoing check of a premise of how it's going on. And then evaluation is like doing an analysis at the end of the evaluation, the end of the monitoring to see what went well,
okay.
what didn't work better, and how to improve on it.
Okay. Thank you. It's like you're an expert in M&D. So probably someone with maybe just maybe to top up on what Elizabeth has said. Yes, you can just unmute because from my end, I'm not able to see. So we have, are you able to see people who are carrying their hands? So that is Ezekiel Mensah.
So, sir, can you hear me?
Yes, I can hear you loud and clear.
Okay. So I'm just trying to share my idea, man. So I will say monitoring like involve the ongoing tracking of activities or output, and I mean in terms of the to ensure the everything is aligned or applying with the goal. And in the other hand, I
Mm,
would say in terms of evaluation, it's a periodic assessment that examine the overall effectiveness, efficiency, and I would say like relevance of the project or the program or any activity that you are involved in. So that's how I see.
okay. Okay. Thank you for that, Mensa. So, so team, I think actually you people know everything. So probably I should just just say the class is done so that people can go home. But then the way we've stated, so monitoring is a routine thing that we do so that we can be able to spot check on activities that we carry out. So for people who are doing businesses, first of all, we should have these records. So like let's say sales record, stock record, purchases, inventory. So you keep on checking on them so that you're able to even develop, maybe observe a trend. So like let's say if it in terms of sales, you're able to see like if I purchase maybe bread on Wednesday, normally it really sells on Wednesday. So that means you do more sales of bread on Wednesdays and not any other day. So and probably there's some products that don't go on Sunday then. So you do monitor based on the data that you keep on collecting, maybe on a daily or a weekly, but it is routine. But then when it comes to evaluation, evaluation is something that you do on specific occasions. So normally you do maybe baseline. So before you do maybe you start a business, you should be able to do what is known as baseline survey, which is normally market research. So when before you start an enterprise or a business, normally you do what is known as market research. So you do research and just get to understand, like, okay, if I start maybe this business of selling maybe fries or maybe a boutique, what are the baseline? Like, at what point should I start? And then maybe during maybe midterm, in case you have a timeline that you really want to do this, maybe midterm and we have the end line. But then in the process, we also have the process evaluation. So you see, like maybe if I'm processing tea, you evaluate the process of preparing tea. Is it cost effective? So that you check on can I improve on this process? So we call it process evaluation, so that you can check on effectiveness. You can also check on impact. So probably whatever you're selling, does it have an impact on maybe your sales? Whatever you're doing, does it have an impact on your sales? Is it having an impact on the customer? So you check also on the impact of whatever you're doing. So just in short, the way we've said, don't worry, I'll be able to actually Success already has this presentation, so she'll be able to share with all of us. So what is M&D? So M&D, this is just a book definition, so it does not mean that whatever you said is wrong. So M&D is a process of continual gathering of information. The way you said, so like a business, you need to continually gather information, and that's why I'm saying that you need to keep records. So we have several form of records. So we start with the stock or the inventory records. We have records such as a sales record. You have maybe staff record where you record staff, the payroll and stuff. You also have things like sales, purchases, data. So you need to continually gather those information and assessment. So assessment is now after gathering the information periodically, you conduct assessment just to determine whether progress is being made towards specified goals and objective, and to highlight whether there are any unintended positive or negative effects from the project or business and its activities. It is an integral part of the project cycle and good management practice. So this is something that you can never avoid to do as a business person. Just to give you an example, while I was working with some of the entrepreneurs around in Nairobi, so there's this lady that had done her business. She's selling second-hand clothes. So this is something that she's done from her 20s. Right now she's in her mid 40s. So she's like, I've done this business for 20 years. So there's nothing you can tell me about the business. So I sat down with her, and the first thing I told her was that we need to work on records. So number one, stock, the purchases, and also sales. And after a month of collecting data, the lady was able to realize that the business was dead. The only thing that was keeping the business was the loans that she gets from women's saving and loaning groups, and also from the various banks. So from there, she was able to see that all her money goes to expenses, but then she doesn't really make money out of it. So through that, she was able to learn the importance of always keeping business records. So that is why I'm saying that as a business person, you cannot really run a business without really knowing, because most of the time, if you're an employed individual, you'll always get money from your salary and maybe pay rent for the business. You know that business should be able to pay for its rent. So unless you keep records and check on the sales and also just be able to do sales versus purchases so that you can see whether you're making any profit, you'll never really realize that this business is really costing you your salary. So business records are really an integral part of business and something that we should always strive to keep. So I know most people are asking, why are we talking about M&D in business? So number one, for accountability. So accountability in the aspect of you demonstrate to donors. So this one probably I remember we've worked with entrepreneurs who probably we've been able to link to crowdsourcing individuals who are able to crowdsource, fundraise and be able to give them grants. So when you keep records, you're able to show somebody that, hey, you gave me 50,000 Kenya shillings. So from it, I've been able to do this and do this. So the records are able to show that. And also taxpayers or also in this case, in Kenya, we call them Kenya Revenue Authority. I don't know how in your country you call them. So in case they come to your offices, you are able to show them, like, you see, this is the much I owe in terms of taxes. And then beneficiaries and implementing partners, that expenditure action results are as agreed and can reasonably be expected in the situation. Number two, for operational management. So So provision of the information needed to coordinate the human, financial, and physical resources committed to project or program and improve performance. So how can you manage this business and be able to know that you're performing according optimally without records? So record is what is able to show you that even if you have employed 3 people, those 3 people are able to produce this much in a day. If you maybe employ this machinery, you're able to know, like, if I have this maybe machine, I can be able to produce this number of items. But then if I use this one, I can be able to produce this number of items. And then from there, you can be able to compare and trust compare and contrast, that you're able to know maybe probably which machine gives you more output in terms of revenue. So you can be able to operate the business optimally. So if you also, as I said, you should also be having inventory records where your inventory is able to show you whether the performance is according to how you really foresee them to be. And then it's also for strategic management. So it is through record that you can be able to know, do I expand this business? Do I and scale the business? Probably you have 2 branches, and then at the moment, based on revenue, you're not able to sustain 2 branches. So how do you make that decision without records? So you need records and to be able to know that, to make that strategic decision. So you need records to do that for. And then for capacity building. So how do you know areas that you're not doing well, and maybe areas that you lack capacity, and you can be able to improve at? So the only way to do that is through records. So records can be able to show you that maybe you're not doing well in sales because maybe your staff are not well capacity built to maybe interact well with the customers, and their customer relation maybe short diff I mean there's shortcoming on in that aspect. So we should be able to ensure that the records we are keeping is able to help us in that capacity. And then so monitoring, and you've agreed is continuous. So this is something that you do on a weekly, monthly, daily. So continuous collection of data for on specified indicators. So in this case, for business, we indicators, we're talking about things like sales, things like sales stroke revenue, purchases, things like stock and inventory, and and also check on the progress and achievements in relationship to the objective. And then evaluation is a periodic, the way I said. So this is a periodic assessment of the design, implementation, outcomes, impact of a development intervention. So in this case, we're talking about the business. So so for business, you could check on things as such as customer satisfaction. Have you ever done a survey just to check whether the customers are satisfied with the maybe the service you're offering? Have you ever done a survey or an assessment just to check whether the process maybe you're using to produce whatever you're selling is cost effective and is something that beneficial to the organization? So have you ever done maybe market survey before you start a business? So this is something that you need to be doing periodically, so that you can be able to check, especially customer satisfaction. Most of the time we sell things based on our own ideology. We never really get concerned about the customer, whether they really would prefer whatever we're selling, and maybe how they would like the item sold to them. So evaluation criteria. Um, Number one is relevance. So when you're doing evaluation, especially for the business that you're doing, so we normally want to check on relevance. Is your is your business idea relevant to the people that you're selling to? I've always liked giving an example of businesses that most of the time you get people that we interact with the two. So ladies, Normally, you see, a lady maybe should get some money from somewhere, and then the first thing is you hear the lady is now doing a boutique business. The first question is, when did you do an evaluation or a market research to know that that business is relevant to the customers that you're doing? And then most of the time you'll see that the business, most of the time I give them 3 months. After 3 months, you'll see them close because that business was a very good idea, but it was not relevant, especially to the market cohort that maybe you're targeting. And then efficiency. You need to evaluate how efficiently you're able to maybe do production, procure your items, and ways that you can be able to maximize on cost and also production. So you should always be able to ensure that when you're doing evaluation, you also check on efficiency of every aspect of the business. And then the other one is effectiveness. So, how effective is your maybe business practice? Like, let's say maybe you talk to your customers through email. How effective is it? How many customers do you have that maybe are accessible through email? So that is something that you also need to check. How effective is the business process? Like, okay, it is low cost, but how effective is it to be able to reach out to the market that you're targeting? And then the impact. I know impact is mostly to the NGOs, but also business. You can be able to check whether your business is having an impact to the community that you are. And then sustainability. So whatever the practices that you have, are they sustainable? Is it something that you can be able to do in long run? So like let's say you've decided to reduce cost of whatever you're selling, how sustainable is that to your business? So at the end of the day, you should be able to ask yourself, is it sustainable? Is it something that as a business you can be able to do? So that is something that you really need to check on. Okay, so based on what I have said, so probably we can maybe discuss what do you think are the importance of monitoring and evaluation in a business? So it's again an open forum, so we can be able to just unmute and just discuss and people just share. Why do you think it is important to conduct based on whatever you've been able to why it is important to conduct the talk?
Uh, I had seen um I had seen some hands. I think I saw Rosemary hand raised, but I okay, she raised it again.
Hello, I was
Sorry,
saying,
someone called me and then I went offline. I'm sorry for that. So Mary, you can proceed.
it makes decision making easier for the business.
Okay.
Yeah.
Thank you for that. So whatever you're saying, Mary, is that decision making becomes easier because you already have data to back up your decision, right?
Yes.
Okay, thank you. Any other person? I am wondering, my screen is not moving. I wanted to remove the current slide. I hope people are not going to say the things that are already there. So Ezekiel, I can see your hand is up.
Yeah, I already even tested it, but yeah, to say to know your weaknesses and your strengths, in terms of business.
Okay, thank you. So can you talk about even planning? So, have you ever heard about SWOT? So if you ever heard about SWOT, so SWOT analysis is where you're able to determine your strengths, weaknesses, opportunities, and threats. So you can use data to also develop your SWOT analysis, and it will be something that is really actually you can even use data from even your competitor. So like let's say you know your competitor, and maybe probably you have access to their data, so you can be able to even know how much they sell, and that should be able to develop your opportunity. Because if your computer can be able to sell this much of product in a day, then it means that that is an opportunity for you. So you're able to learn and know that if your computer can be able to do this, then you can be able to even do better than the competitor. So and also you can be able to know where your weaknesses are. So because based on that, I'll be able to see where you are underperforming, and that I believe is weakness, and where you're doing well, that is strength, and you can be able to build on them. So thank you, Ezekiel, for that contribution. So any other person with a contribution? We are 17 people, so I believe that all of us are doing businesses, and I believe all of us are collecting data, so we should be able to contribute.
Yeah, we have Innocent. Innocent is saying it is very easy to know if you are achieving your objectives, that you're able to know if you're achieving your objectives.
Thank you, Innocent, for that. The reason why, by the way, one of the major reason why we do record keeping is to know, first of all, you have to set goals, set objectives. So this is like, let's say it's for sales. So, when you give people maybe a record, maybe a target, like let's say this month we need to sell maybe items worth 300,000 Kenya shillings. So you cannot be able to know whether you've achieved your targets or the objectives if you don't keep records. So the records you can be able to at the end of the month be able to run the data maybe collected for the sales, and be able to know that this month we've been able to outdo the 300, or do less than the 300,000. So that is very true. Innocent, and is one of the reasons why we do that. And even if you're able to check on even reporting for these major companies, they normally have sales targets. And you always hear them say that we surpassed our target, or we underperformed our target. And these are the reasons why, and we hope to improve on it based on the data they have. Okay, any other person? Hello?
Yeah, we have Francis saying to know whether the business is bringing relevance or not.
Okay, thank you, Francis. Yes, so Francis, that is very true. So the reason why we conduct things such as a customer satisfaction survey is always to check on whether whatever we're selling is relevant to the customer. Like maybe you're having a hair salon, and you keep on doing maybe a style that they feel that is not the right one. So you see, you're doing it, but then you're not able to reach out to more customers because of the relevance of whatever you're doing to them. So for you to always remain relevant, you must always conduct market surveys, and also customer satisfaction surveys, so that you can be able to know whether this is true or false. And I know, in one way or the other, you've always received calls randomly from these big research companies on behalf of big companies. They're conducting just research on whether if they were to introduce this to the market, would it be suitable for you. They're just doing that to check on relevance. So that is very true, and that is appreciated. Yes. Any other contribution?
No contribution for now. Okay, we have Sharon raising her hand. Okay.
Yes. Sharon, just unmute, please, and contribute.
Sorry,
Sharon. Okay. So proceed,
can
Sharon.
okay,
Yes, I
thank
can
you.
hear you.
So the other thing is, I'm sure a lot of things have been spoken. So the other thing is you can be able to see, to observe if your business is on track or not,
Mm.
and you'll be able to identify certain problems that you can easily work on there, and then if you are able to put everything on track and able to counter check.
Okay. Yeah, that is very true, Sharon. Actually, when you do, like, let's say, weekly records, so that when you conduct like weekly records, if your target for the month was maybe 30,000, and then you know that this 30,000 I can be able to achieve in maybe 4 weeks, but in 2 weeks you've not done 15,000, that means that there might be an issue with you achieving your target. So it means that from the sales record, you can be able to see that you may not be able to achieve. So you can be able to help you track whether you're going to achieve your set goals, and then maybe revise the goal, or also maybe re-strategize on how you can be able to achieve that. So just in a nutshell, so thanks all for contributing. I'm just going to go through because I know everything we've discussed is true. So number one, it gives clear and conscious information on what's happening. So when carrying out any project or this is business, it is crucial to keep in mind data clarity. When carrying out surveys, it is possible to end up with tons of information results that can be time consuming when working through it. So data will definitely will always give you clear and concise information on what is happening. Because if you don't keep data, then you might not be able to know. That's why you say when somebody asks you like, "Hey, how much have you sold this month?" You can say, "I think." But then if can you hear me? Hello?
Yes, please, we can hear you.
Oh, yeah, success. I've seen you calling, so I was wondering if I can be heard.
Sorry. Yes, we can hear you.
Okay, thank you. Okay, so give concise and I mean clear and concise information on what's happening. So that is number one. So it will always tell you exactly how you're performing as an enterprise. So number two, it also help you monitor the input. So for instance, if last week I'm producing mandazi. I don't know if you all know mandazi, but I know people from Tanzania and Kenya, we all know mandazi, or we call it mahamri. So it is like a donut or something. So like let's say I use 2 packets of flour, and then this week I've introduced 4 packets of flour. So through data keeping, I can be able to monitor and see the maybe impact in terms of revenue of these 4 packets of flour, and see whether that is really selling or not. So that's something that we should be working on, and also risk and reward evaluation. So we that is what as we had already talked about. So we should be able to check on strength, weakness, opportunity, and threats. I've been told that my time is really gone, so I'm trying to rush. So and then this is just continued. So assessing new possibilities. So the way we said that based on sales, you can be able to see that this business is really doing well. Maybe we can think of expanding. So never just scale because of what you think. But when you base it on data, you can be able to now know that this is the right time to maybe introduce a new product or new variety to the market based on data. And then you should be able to know overall progress report and innovation and diversity of opinion and thoughts. So when you conduct this maybe customer satisfaction survey, so you should be able to know whether there's need for innovation, and also you'll be able to know the diversity of thoughts because you know if you like maybe rice cooked in a certain way, customers will tell you like, no, we don't like our rice done that way. So kindly consider doing it this way. So through that, you'll be able to know like, okay, as much as I prefer preparing rice this way, but I should do it the customer way. So I believe that is self-explanatory. So these are just common terms of monitoring and evaluation plan. So when you're working on your monitoring and evaluation plan, so number one thing that you should have there is input. So that is the resources required to achieve outputs. So like in this case, it sales, those items that I mean, the inventory, let us call the inventory or the stock. So the stock. So number one is things like stock, sales, you need no, input is what you use to produce to achieve output. So those are things like stock, the inventory, the machinery, money, equipment, and also the human resource. And then output is the outcome of the input. So these are tangible results. So these are now the stock or the produce that you produce. So you should be able to talk about them and also the outcome. So this is now the sales like okay you produce 1000 unit of this item, so what is the outcome, how much have you been able to sell? I'm sorry, I'm rushing because I only have very few minutes remaining. So common terms in monitoring, so this is continuation of the previous slide. So objectives, so and then we have goals. So objective is the way we've talked about it, so you can have an objective maybe to achieve in a month or a year or something like that. And then the goal is what is the goal of your business? So your goal should always be geared towards customer satisfaction. I think that is the most important goal of any business. So geared towards customer satisfaction, and then the impact and also the indicators. So indicators there I've said should be things like sales, inventory, purchases, if you also have maybe for the people at the warehouse, maybe production, you should also have things like the HR records and such. So those are things that we also have in the M&D plan. And then the principles. So first of all, you should meet needs of all the stakeholders. So your plan, like let's say you're planning to produce. So the need should not just to be able to produce and produce. It's supposed to be geared towards even satisfying the customer's need for that. And then also the system should also be able to measure the impact of enterprise strategies on the livelihood of those involved. So that is, I believe, should be self-explanatory, but your system should be able to measure the impact. Like let's say you're selling food. What is the impact of your food in the livelihood of those that are involved, both the customers and also probably the employees, and identify what needs to be done, how, where, when, by whom, identify what works and what does not work. So your system should be able to identify what needs to be done. So the how, the where, the when, by whom, and also what works and what does not work. And then it's supposed to be sustainable the way we had talked about. So your system, if you don't come up with a system that your business cannot be able to afford. So right now, don't go get actually your system for now, monitoring how your business is working. You should not be able to hire a consultant because I believe your business is not that big. So these are things that probably you can utilize YouTube and Google and come up with, develop a very robust system for you, especially the ones we're talking about, without incurring any cost. Because if you're going to maybe hire maybe an auditor or something like that, it might not be sustainable for your business. And they're supposed to be participatory in involving. So when you're developing these records and system, kindly involve everyone, including the customers and also the employee. And it's supposed to be very simple, useful, it's supposed to be used. So don't have a system that even yourself you don't understand. And you have a very nice system, but nobody's using it. It's supposed to be very simple and it's supposed to be used and also very useful. So we need to take note of that. So M&D in a business setup. So this is just the kind of indicators that I was able to come up with. So indicator number one is number of satisfied customers and meeting their expectation and need. So the source document for this is customer feedback form, questionnaires, and number of repeat customers. Because definitely if you have a repeat customer, so probably that customer benefited in a way from whatever you sold them to them. So that means that that customer should be able, you should be able to appreciate them. So that should be a source document. So if you're able to identify that customers are coming back, so you should be able to even develop a trend of how many repeat customers we're having. And it's also can also come from sales record and customer database. And then you should also be able to track net profit. So profit is based on sales record, inventory record, and expenses. So we take inventory and expenses minus sales, and then you can be able to develop a net profit. And this is supposed to help you to see whether your business is profitable or not. And then quick ratio. So quick ratio is to track whether your cash, securities, and the money you expect to have soon are enough to cover your liabilities. So that is the money in layman's languages, the money that you currently have, or anything that you can be able to sell, plus the money that you owed, maybe by your debtors and the customers that you sold to in credit, on credit. If you add all those, you're supposed to be able to pay your liabilities. So if your business cannot, if you sell all the items that you can be able to sell very fast, plus the money owed is not able to pay liabilities, then you should be able to know your business is going to fail. So how do you know where do we get this data from? So the cash flow statement and records. So you're supposed to be maintaining that so that you can be able to see whether your business can be able to quickly settle their liabilities. Net income ratio. So net income ratio is the net income ratio is the amount of money left over after operating expenses are subtracted from revenue. So this is an increase in net income means that either revenue is going up or costs are going down, or some combination of the two. So your net income ratio should be so expenses minus the amount, I mean the income that you've been able, maybe in a month, the amount that you've been able to sell, that is revenue, minus the net expenses. And then if you're able to see it growing, then it means that either the cost that maybe electricity cost was higher, but it's gone down, or you had an increase in sales. So that means you should be able to see whatever you did well that month and be able to capitalize on it. Or if you did poorly, then you should be able to work on that. And then also activity. So are you managing assets of the company effectively? So this should be able to see, like let's say you have a cake production item or maybe oven, and the capacity is supposed to be 3,000 cakes a day. So you should be able to track the activity of this. So if your maximum is 3,000, what you're doing is 500 a day, that means you're not utilizing this cake production oven effectively. So you need to ask more questions about it and be able to know whether is it that the market does not require 3,000 cakes a day, or it's you who's not capitalizing on the capacity of the inventory. So break even. So break even is the point, the number of units that is needed to be sold during a given period in order for the company to cover all production costs, sales costs, and business overhead costs. So break even is where, like let's say you're starting a business and your startup cost is maybe 2 million Kenya shillings. So the break-even point is when your business should be able to pay you back the 2 million Kenya shillings. So you're supposed to be able to also track this. Because probably the startup cost you got through loan. So you're supposed to even be able to know like, hey, when am I supposed to be able to pay for this? So how do we track this? So we have the sales records, we have the inventory, and also the expense records. So as a company or as an enterprise, you're supposed to keep that. And then the social media engagement. So the good thing with the social media platforms, you can be able to check on how customers and your followers are really engaged in your posts and sharings and everything. So you're supposed to also check on this. As a business, if like let's say you're selling clothes and you post today you've posted the clothes you sell, you're sharing and nobody has even commented on it, then it means as a business, you're not doing well. So you need to know, is it that your messaging is what is not right, or whatever product you're selling people don't like. So you're supposed to be able to check on people who are viewing, check on people who are commenting, people who are sharing, and also there are people who have been able to just look at it. So the good thing with that, if you have a maybe Facebook page, you have a TikTok or Twitter, normally they're able to give you a monthly report so that you're able to see how you're performing. And then employee retention rate. So you're supposed, as a business, you're supposed to check on that. Hiring and training employee is a major expense. So you cannot be always spending money training employees and then after 1 month they are gone. So it means that you're spending a lot in training, but then not retaining. So you're supposed to be able to check on that. So for this, you can be able to check using the HR document and then sales indicators. So this is very key. So when the number of average sales goes up, the amount per transaction goes up with it, and when your company is heading towards success. So how do we get this? Through the sales record. So I think that is it for me in a nutshell, and I hope I've really tried to make it as simple as possible and understandable to everyone. So anybody with a question or a comment or something like that, I'll be glad to take.
Thank you so much, Philip, for that wonderful presentation. So please, if you have any questions, use the chat or the Q&A to ask your question. Philip, you mentioned something
Yes.
about quick ratio. Quick
Yes.
ratio. I used to have difficulty
Yes.
pronouncing that. Yeah, so please, can you just shed a little more light on that?
Uh, okay, so quick ratio. Okay, don't think of ratio in terms of mathematics. So quick ratio is that, okay, like even an individual, your income, probably you get money through salary. And probably your TV, something that you can offset, you can sell and be able to offset your debt. So first of all, think of your debt. So like maybe you have a loan you're currently paying, you have maybe somebody gave you some money. So add the total number of debts you have, and then think of your money, I mean salary, plus things that you can easily sell in the house, like let's say the TV, the laptop, your shoes, or maybe your clothes. You like the easily offsetable, I mean easily sellable items in your business, or even you as an individual. Like let's say I have a TV, I have a laptop, I have a smartwatch, and maybe a phone. I can easily sell those plus my income, like let's say the salary, and then I compare that to the liabilities I have. That is the loan and other liabilities. So if all my sellable items plus salary is not able to offset my liabilities, then it means that we are doing poorly. So quick ratio is just you just get the ratio between the revenue and also assets that you can easily sell to offset the liability with. So if you're able to do compare that and you realize that your business cannot be able to pay its debts based on the revenue projection and also the items that you have that are easily sellable, then that would really be a bad one for you as a business. And also even as an individual, then because it means you're bankrupt. Now that's where even the bankruptcy comes in because you're not able to settle your debts. So technically that is what it means. Yes, Eugene.
Thank
So
you so
you
much,
can
Philip.
proceed. Mm,
Yes, we have one question from Ahmed, and he's asking, who is the rightful
mm.
person to handle M&E in a startup?
It's definitely the business owner because as I'd explained, as a business, you should not really incur so much cost because at that point, M&D is technically in a business, M&D is just accounting and auditing. So accounting is the monitoring, and then auditing is the assessment. So you see, auditors may become media, they come at the end of the year just to audit the sales, I mean the records, and then the accountant, they're the ones who they keep the records and even key them in the system. So at the startup level, kindly, if you're not equipped in terms of capacity, go to YouTube, go to Google, learn these things. They're not that expensive, so you can be able to manage this and cut on the cost that you'd incur if you are to employ someone, an accountant or an auditor to do that. Also, I remember someone even asking me if, like, let's say as a startup, you'd require QuickBooks. And I was like, first of all, QuickBooks is very expensive to maintain. And probably you'd even require training to maintain QuickBooks. But then Excel is so easy. And QuickBooks is just an advanced level of Excel. So as a person who is just starting, just develop maybe this thing and Excel sheets, and you'll be good to go. You don't need to advance to the level of QuickBooks or Dynamics or any other EPR level software. So that is what I would advise a startup.
Thank you so much. So thank you all for still rejoining. So we don't know what happened there. Zoom had an issue and then ended our meeting without our permission. So, but thank you for joining. Thank you so much, Philip. Sorry for the interruption.
No, it's okay. It's technology, so we understand.
Yes, but we got the major presentation, and especially the indicators and how we can get these indicators. We really appreciate that knowledge you shared with us. So any final words before we finally sign off?
From me, it's just thank you to all, and it's always a pleasure interacting with you people, and I look forward to interacting again and again with the team.
Thank you. Thank you, everyone. So have a lovely evening, lovely afternoon, depending on where you're coming from. Until next week, bye-bye.
Okay, thank you, and have a lovely day.